With Halloween just around the corner and surprises lurking everywhere, there's one big twist you need to be ready for. The Bank of Canada's major mortgage changes coming into effect on December 15th. Details coming up. Today, I want to dive into whether our market has truly peaked or if we're on the brink of a significant shift. Also, mark your calendars for October 23rd because the next interest rate announcement is coming. Will the Bank of Canada drop rates by 25 or even 50 basis points? Let's get into that. Plus, I have some eye-opening statistics that may not be giving you the full picture of the market, and I'll share my thoughts on why. So stick around. There is a lot to unpack. Okay, first, let's talk about the statistics that may not be giving you the full picture of the market. Here's what I mean. I'm pulling up a page from the Calgary Real Estate Board's monthly market update. Now, at first glance, it looks like prices are skyrocketing with nearly double-digit growth across most property types. Now, in my opinion, this can give kind of a misleading picture since it compares prices to the same month of last year. Now, each year is different, and last year saw an unusually high level of migration to Calgary. If you focus on supply and demand, like I do, now these numbers might raise some eyebrows. Sales are down 17%, new listings are up 15%, inventory is up 50%, and months of supply jumped up 81%. It looks like the market is in a deep buyer's market. Now, this is because CREB and most media outlets compare year-over-year sales, which I personally don't think shows the full picture. Buyers and sellers are always trying to time the market, so knowing when to enter or exit is important, but that's tricky unless you have a genie. That sets the stage for what's next, which I believe is more relevant for buyers and sellers. If you've been following our channel, we usually show the stats from the last 3 months. We find that's more of an accurate reflection of the current market rather than compare it to the same month last year. Let's start with detached homes, then cover the other property types, discuss whether the market has peaked or if we're seeing a new trend, and touch on mortgage changes and interest rates announcements and how these could impact Calgary's market. Detached homes. So for me, when I'm looking at statistics, what I'm looking for is supply and demand. It's hard to wrap my head around the relationship between the world economy, economic factors of Canada, unemployment rate, etc. So I just try to keep it simple. How I determine demand is by the sales, days on market, benchmark price, and I use the months of inventory as an indication of what market we are in. More of that in a minute. Now, when I'm thinking about supply, I'm looking at new listings, inventory, and days on market. That said, let's look at Calgary detached homes. Pricing is down slightly. July was $767,800, August $762,600, and September was down $5,500 to $757,100. Here is a graph showing what this looks like. We are coming off our peak pricing of $767,000 in summer, which is the red line, but realistically, it's only about $10,000, so it's not really a material amount. It does, however, set the stage of what could be happening in October. You can see that the sales, the green bars, have shown cooling demand since summer, but this is seasonal. We usually start seeing this at the end of summer. The majority of sales happened below $750,000, and we have the highest amount of inventory shown by the blue bars. 300 more than the second highest amount in August, and it hasn't been this high since August of 2022. New listings are higher at 1,792, the third highest amount of new listings this year. Months of supply. This is a metric that we use to determine what kind of market we are in, a buyer's, seller's, or balanced market. What it means is based on the last month's sales, how many more months would it take to sell all of its existing inventory? Now in Calgary, between 2.5 and 4 months of inventory is a balanced market. Anything less than 2.5 months is a seller's market. Anything more than 4 months is a buyer's market. By the way, when you hear months of supply or months of inventory, they're the same thing. Months of supply for detached homes for September is sitting at 2.46. So I would say we are slowly transitioning to a balanced market. Even with extremely high levels of inventory, my prediction is I don't think we will be in a buyer's market next month, but we will be sitting comfortably in a balanced market. Home buyers, I think the next few months up to December is going to be your time to shine. You have a lot more choice to choose from and more leverage when it comes to negotiating, something you guys didn't have at the beginning of the year. You're less likely to run into bidding wars, and I would not wait to time the market. Instead, I would act based on the data because remember, these statistics are a lagging indicator. You will not know we have reached the bottom until we are on an uptrend after we see the data. With the new mortgage rule changes that favor buyers effective December 15, and the fact that, in the last 3 years, we saw prices starting to pop in January and February, I would be looking to act before December. Homeowners, if you wanted to put your Calgary home for sale, it would take you 27 days to sell, but it could be slightly longer in October and maybe even a little bit longer than that in November. You're facing increased competition, slightly longer time to sell, and I would act quickly if possible. But if you can wait until 2025, that might be a better bet, unless there's even more inventory than at that time. Hard to tell. I wouldn't recommend overpricing your property, and I definitely wouldn't bother testing the market. Having a pricing strategy is extremely important. Semi-detached. Pricing is down, but not significantly. In July, prices were $787,900, August $681,200, September was down $2,800 to $678,400. Here is a graph of what that looks like. We are coming off our peak pricing from July, and you can see that sales, the green bars, dipped in August but ticked up in September. Now, this fluctuation could suggest some stabilization or temporary rebound after a slower August. Just like detached homes in Calgary though, we have the highest amount of inventory shown by the blue bars at 378, which hasn't been this high since September of 2022. This high number of inventory could lead to downward pressure on prices if this trend continues. New listings are unchanged from last month, indicating that supply is holding steady. Months of supply. Months of supply for semi-detached homes for September is sitting at 2.09. So still a seller's market, but approaching a balanced market. For home buyers, rising inventory means you have more options and potential for negotiation. Pricing is holding steady, but if inventory continues to rise, you might get better deals in the coming months. Again, don't time the market. Homeowners for semi-detached homes. If you wanted to put your Calgary home for sale, it would take you 25 days to sell, which is the same as August, but just like detached, it could be slightly longer in October and maybe even longer in November. There is a case for pricing to edge down slightly in the coming months because of rising inventory and steady sales. Flexibility is really the key because you have more competition. Working with the buyer for possession and pricing will help sell your home faster. By the way, I'll be discussing the mortgage rule changes and rate cut impact coming up soon. Row housing and townhomes. Pricing is down slightly. In July, it was $464,200, August $461,700, and in September, it was down $2,500 to $459,200. Here's a graph showing what that looks like. We are coming off our peak pricing from July, and you can see that sales by the green bar is virtually the same. In August, we had 382 sales, and in September, it was 377. Inventory though, the blue bars, is the same story. It's the highest it's been since June of 2022. Now, this high number of inventory could lead to downward pressure on prices if the trend continues. New listings is actually down by 40 or so, along with similar sales as last month, can hold up the townhome market a little bit better than semi-detached and detached homes. Months of supply for row housing for September is sitting at 1.98. So still a seller's market at under 2.5 months of supply. Home buyers for townhomes. Kind of the same story here, right? More inventory means more choices, and as time goes on, you might be able to take advantage of slightly better prices in the future. Homeowners of townhomes. Now, if you wanted to put your Calgary home for sale, it would take you 25 days to sell, but just like the previous property types, it could take a little longer as you wait. Apartments. Pricing is also down slightly. So in July, it was $346,300, August $346,500, and September is down $1,500 to $345. Here's a graph showing what that looks like. Now the red line is price, and you can see we are not declining as much as we are for detached or semi-detached homes, but it does look like it is more stabilizing. You can see that sales, the green bar, is decreasing. We had 100 less sales in September than we did in August. Inventory, though, is the same story. It is at its highest since September of 2021, so 3 years ago. This high number of inventory could lead to downward pressure on prices if this trend continues. New listings for condos is relatively the same. It was 8 new listings less in September than in August. Months of supply. Apartments are in their own category, which is a balanced market sitting at 3.23 months. My prediction on the condo market is that there is a possibility it could reach a buyer's market in October or November if inventory continues to rise or sales continues downwards at the same pace. Home buyers for condos. Same story. More inventory means more choices and more price flexibility. This market saw a pretty dramatic change from being hot to a balanced market relatively quick. Now, although the numbers are a little more in your favor compared to sellers, you still have to act fast on good quality properties to secure your home. Homeowners of condos. If you wanted to put your Calgary condo for sale, it would take you 33 days to sell. So, what does all of this mean? Well, looking at the pricing across all property types compared to the month before, it's not a huge change. I mean, detached home prices went down $5,500, not a huge amount. Semi-detached, $2,800. Row was $2,500. Condos were $1,500. Now, as a buyer, this info can be super annoying. I mean, you guys have been waiting for so long for prices to come down, and even though it did, it's not really going to reduce your monthly mortgage payments by a significant amount. But something that's on your side is the fact that our inventory levels have been pretty high. And that is the main metric I'd be focusing on in the coming months. I would also keep your eyes on sales and new listings. I do feel the overall market is balancing out, and I truly believe that the coming months will provide some really good opportunities for you. I think our market is shifting from a seller's market towards a more balanced market. Our LiveInnerCity real estate team has noticed a surge in detached homes across the city, and months of supply suggest we are about to enter a balanced market. The condo market is already in a balanced market. Semi-detached and townhomes are still in seller's territory, but it's reasonable that it could hit a balanced market in October. Mortgage rule changes. Here are the mortgage changes that was announced on September 16th, effective December 15th of this year. The first two apply to insured mortgages, meaning anyone putting less than 20% down. So first-time home buyers and all buyers of new builds are now eligible for 30-year insured mortgage amortizations. Now, this is going to reduce your monthly payment, making it more affordable for home ownership. The second is you can now increase your purchase price for an insured mortgage from $1 million to $1.5 million. The down payment structure will stay the same. So it's 5% for the portion of the purchase price up to $500,000 and 10% for the portion between $500,000 all the way up to $1.5 million. So the minimum down payment for a $1.5 million home is $125,000. Now, lastly, this new rule simplifies switching mortgage lenders at renewal. Now, starting November 21st, 2024, borrowers can switch lenders at renewal without needing to pass a stress test. This is going to make it easier to find better mortgage terms. This new change applies only to straight switches, meaning the borrower doesn't change anything on their mortgage, but just moves it to a new lender while keeping the same loan amount and payment schedule. Here are the 3 big ideas on how these mortgage changes could impact Calgary real estate. First, let's determine what mortgage payments will be when comparing a 25-year to a 30-year amortization. For every $100,000, it's a difference of about $50 per month, depending on your rate. General rule of thumb, okay? So big idea number 1, a boost in demand for new builds. Now, since first-time home buyers are the most sensitive to payments, they will probably be looking at those new shiny developments. And this could be more competition for those homes. Big idea number 2, affordability may improve slightly, but not for long. Lower monthly payments over 30 years can definitely help, but this could create a rise in demand and could push up prices pretty quick. Big idea number 3, developers may speed up projects. Now, new incentives could drive more new builds, helping address housing supply and offering more options for buyers, but there are a few caveats to this. For one, it's gonna take time to build these projects. 2, builders are limited by the amount of trades available to them, especially if there's going to be a spike in construction activity. And 3, my question is, could this accelerated pace and pressure of building more homes faster decrease the build quality of homes? Interest rates. So you guys may have heard how the US had a jumbo-sized rate cut at a 0.5% announced on September 18th. After that happened, economists and investment experts aren't entirely ruling out the possibility of a 0.5 point cut for us, though the broader expectation is more of a modest 0.25% cut on October 23rd, followed by the same on December 11th. Now, in this article, Randall Bartlett, Senior Director of Canadian Economics at Desjardins, said that he expects 6 more 25 basis point cuts in 2025, bringing the policy rate down to a resting point of 2.5%. Now, there are some factors that could influence a larger rate cut, and those things could be the strength of the Canadian economy, if the unemployment rate jumps further, if CPI inflation drops again in September. My thoughts on all of these things being tied together. Now, I think buyers are coming off the sidelines and are trickling into the market. We're seeing it firsthand. Interest rate announcements are on October 23 and December 11. And the expectation is by then, the rate will be down 0.5%. The new mortgage rules come into effect December 15th. Buyers' monthly mortgage payments will be lower due to a 30-year amortization and lower rates. Calgary real estate prices are stabilizing and could drop even further given the high amount of inventory. I think all of these factors will play a significant role in the decision-making process for buyers and be enough incentive for them to jump into the market. The big question is, how long will this period of correction be? And how big of an impact will the new mortgage changes have on the market? Only time will tell. If you're a homeowner looking for ways to increase the value of your home with low cost, high impact improvements, download my ebook in the description below. And if you're a buyer and you want to know the costs of buying a home, then check out this video up here. My name is Felix Chan, Calgary Realtor and Mortgage Broker with the LiveInnerCity Real Estate team with Real Broker, and we'll see you in a few seconds.